going on, guys? It's your boy Justin here, and in today's video we want to talk about the basics of technical analysis. Now, it's important to understand the basics and what majority of the industry is doing so you can kind of observe the masses and do the opposite. But with that being said, guys, what you got to understand about technical analysis is any strategy, any technical tool works. It's just about being consistent with it. So what we're going to do is we're going to take you on the charts, and I'm going to show you guys different technical analysis basic tools that you guys can use and things that you can avoid that will help you along your journey. So let's hop on the charts. So in today's video, what we want to do is we want to just talk about some of the basics of technical analysis. So basics of technical analysis. First one is very simple: support and resistance. 2, trends/trend lines. The next one is going to be supply/demand zones. And then I'll throw in some market geometry. This is the basics of technical analysis. Mind you, I think support and resistance is complete shit, but it does technically matter to a certain extent. Sometimes there are areas where support and resistance turn into support and resistance. What do I mean by that? Sometimes there's going to be an area where the market is doing this. It's going sideways, forming a consolidation. And, you know, we have a roof in the market, which is called resistance. Then we have a floor in the market that's called support. Eventually, either the roof or the floor get breached and they get taken out. So in this example, we'll say the roof is broken. Well, this point here, which used to be the old roof, can now come back and retest as the new floor, right? This is the basic concept that's taught when it comes down to support and resistance and breakouts. Now, for me, I don't really strongly believe in that. I don't feel like that works every single time, or it doesn't work that consistently. But what I will say is there's going to be areas in the market where price is relatively ranging around. We can agree that this is an area of support and resistance, and the reason why is the market's hitting and coming and continue to coming back and forth in this specific area. If I change this from a candlestick chart to maybe even a line chart, we can see that there's multiple touches on both sides of the zone. There's a number of different ways you can draw your support and resistance. There's a number of different ways you can map it out and look at it. In regards to how I look at it, I don't really draw horizontal lines and say, okay, this is the support in the market, this is the resistance. The reason why is simply put, let's say I said this is a resistance point and this is a support point. If this support point was to break as it did, well, basic Forex education says wait for the retest and then sell. Well, in this example, we don't get a retest. It retests a little bit, goes into a wee bit of profit before it would have stopped us out. Same thing here. Price broke through the resistance, it came back. I would have bought the retest and it would have just went lower, potentially stopping me out before it continues to go on. The way I look at support and resistance is very simply put. I look at key areas in price where we're seeing price continue to touch. So what do I mean? If price is bouncing around this specific range, I can almost guarantee that maybe the next time price comes into this zone for multiple confluences, more than likely, if it comes at this zone from the low, will probably bounce. And if it does break, it could probably come back and touch this zone from the top and then bounce from there. So what you have to factor in is that a support and resistance zone or support and resistance is a basic concept that me personally, I don't think that's something that you can solely go off of and trade off of. You know, before this video started, we talked about the basics of technical analysis, things to do and don't. My thing is just trying to blindly trade support and resistance is a big do and don't. The next thing we're going to talk about is trends and trend lines. Now, I'm a big trend trader. I strongly believe in trading with the trend. I strongly believe in not trend lines, but trading alongside the trend. What does trading with the trend really mean? Simply put, trading with the trend simply means understanding which direction that the market is going in and continuing in that direction. So very simply put, if we're in an uptrending market, the safest position to take is going to be trading along with this trend. Now, I'm drawing this trend line just to show you guys the overall trend. I'm not connecting the dots, anything like that. I don't believe in trend lines by connecting point 1 to point 2 and then point 3 and 4 you buy. I don't think of the market like that. What I do see is there's a series of higher lows and higher highs, higher lows, higher highs, higher lows, and higher highs. So based on your technical analysis, Fibonacci, retracement, smart money, whatever you want to say, you can to a certain extent kind of look and see where price could potentially come back to and create a zone, an area of interest where you think that, hey, if price comes back to this zone, I think that we can have a test of this zone, and this is where I'd like to get in and have my continuation move. Trading with the trend just means understanding and establishing which direction the trend is going in. It just means establishing and understanding which direction that the trend is going in and then trading that accordingly. So that put is very simple. If you notice that the market is making higher highs and higher lows, trading with the trend simply means only looking to buy higher lows in this uptrend. Or if, let's say in this example, we're trading in a downtrending market, you should only be looking to sell lower highs. Wait for the market to pull back to a key area and then sell these lower high points. That is what you should be focused on doing. That is what I recommend that you should be doing. Now, let's continue. Supply and demand zones. Supply and demand zones are really big in the sense of where you could potentially see price retracing to. For example, I see there is an area right here on Euro JPY on the 1 hour. This is an area of supply, and this is also a lower high. What happened with this lower high? This lower high put in this lower low. This lower low broke past all these previous points in structure. That low, this low broke past this. Right now, we have to understand that Euro JPY is showing bearish momentum. It's showing a bearish flow. If this is an extreme supply zone here, my thought process is this, is more than likely we'll chop and chop and chop and chop, correct to come back into this zone and then have a nice extension lower, breaking past this previous week low, putting in a new low. That is what I would like to see when it comes down to supply and demand. This is a supply zone. An area of demand is very simple as well. Usually it's the last move down before a move up. So example, this could be an area of demand. This could be an area of supply. Notice how price comes back and you were able to catch a quality amount of pips off of the zone. But supply and demand, it's really just understanding just simple basics of smart money as well. Let's continue. And the last one was just simple market geometry. Market geometry just is something that's very simple that people overlook. Let's talk about this wave right here. This wave was about 340 plus pips. What market geometry says is that if the market is trending and it's moving in big waves, if this last move was roughly this size, or the first move in the wave sequence is about this size, then the next move in the wave sequence is going to be roughly the same size. It might be equal to or greater than. And if this move was about that size, 9 times out of 10, they say the next move will be equivalent to or greater than that size. So now what you're able to do is you're able to start mapping out the trend. If we start seeing the price pull back, what we can kind of do is we can find a rough average of where we'd like to see price pull back to. If this was the size of the last pullback, 9 times out of 10, the next pullback is going to be somewhere equal or equivalent to that. So what can I expect? If this last move was roughly this big, 400 plus pips, once the market makes another impulse, we may get another impulsive wave of roughly the same size. This was actually a trade that we called out in the live room. So this trade had a number of basic technical tools. We incorporated the Fibonacci. We have a ton of Fibonacci videos on this channel. We incorporated our measured moves. That's something you can learn as well. We incorporated a demand zone here and a deep fib level, and then we also put in our de-extension level. This was a phenomenal trade, a little bit over 400 plus pips to the members. But when it comes down to it, guys, the basics of technical analysis is just understanding the trend and what trend you're trading with supply and demand zones. You can use support and resistance, but just understand that it's a construct that's kind of developed to make you think that the market works a certain way when it doesn't. So what I would recommend is when it comes down to you seeing supply and demand zones as basic Forex education teaches them, look at these more so as liquidity zones. Liquidity above and liquidity below. And your goal as a trader is just not to become liquidity. That being said, guys, I appreciate y'all watching this part of the video. Hopefully you got some insights of just basic technical analysis. All right, guys, so we just went over the basics of technical analysis. I hope you guys got to take some value from this, of things to do and not to do, things to avoid as well. But with that being said, guys, make sure you join the Discord. It's the first link in the bio. It's going to be the first link down below. We are looking forward to having you guys trading with us on some of our free weekly calls that we're doing. With that being said, appreciate y'all watching. Leave a comment, let us know what you think, and we'll see you in the Discord. Peace.